Welcome, my name is Thorsten Tiet. I'm the founder of Dividend Stocks Cash, a stock screener to find stocks of companies with long-term profit growth by making long-term profit growth visible, meaning that it looks like this. You can see it in here in the picture that the company increases their earnings per share steadily over the years. And with this also we have a dividend increase year by year. And then we have also capital gains by growing stock price or rising stock price. We also see here the fair value calculation and much more. I want to show you how to find promising dividend stocks in this video. And for this reason, we are going into the screener. The screener is divided in different areas. We have here the center or the core. It's the single stocks. One line represents one stock. And here we have a configuration area, and here is a detailed analysis area based on different charts. If you already worked with a filter, you probably know that the first list which is offered is a list which is not suited to your own needs, to your own preferences. To improve the list, we need to apply a filter according to your own personal criteria. If we are interested in dividend stocks, because we have not only dividend paying stocks here, we also have some stocks like Adobe which are not paying dividends. If we are focused on dividend stocks, then we can, for example, add a criteria to say we want at least 1% of dividend yield, of current dividend yield. We are simulating a dividend growth investor right now, which means that we don't need high dividends right from the start, but we need a decent dynamic of dividend increase. So let's say dividend of at least of more than 1% and a dividend growth of at least 10% by year within the last 5 years, and maybe also the years of dividend increase at least 5 years. And then we have in the screener excluded all non-dividend paying stocks, and we have also included very low dividend paying stocks or sluggish dividend paying stocks with a sluggish dividend increase. You could theoretically now start to go through all these stocks with a high dividend increase or dividend dynamic. It's 131 stocks. You could do so, but I think it's a better idea to respect the profit stability by earnings and even cash flows. So we have a metric here to say include only stocks in this list with a high earnings stability, and not only the balanced earnings or based on balanced earnings, but also based on real cash flow. And if we do so, we limit our stocks to 73, our promising dynamic dividend stocks to 73. Now you have a list which is already crafted according to our needs. We see that there are only dividend paying stocks. We can sort by dividend yield. We see that we have a high dividend stability, high earnings stability. Here are the growth rates. We have the same for the cash flow, the same for the revenue, and we have much more, but most columns are not visible right now to keep it simple. And if we click on the first stock right here, then the analysis shows up, and then we see it's a REIT right now, so we have the fund from operations here, and we see a nice long-term increase of the stock and also of the dividends, an increase. Normally you would work with the list right now, but in Dividend Stocks Cash we have a better possibility to even improve our list, to craft this list according to our preferences, and these are rankings. Ranking is a score, and the score goes for ranges from 0 to 100. 100 is the best, and right now all criteria are turned off, so the ranking is not available right now. We have no score, but we can turn it on by dragging the slider. So we say we want to have a dividend yield of at least 2%, and the ranking, I repeat myself, calculates the score. It does not apply a second filter. So the 73 stocks remain visible. So you can even, they remain visible. So let's just apply the ranking based on one simple criteria, and now you see that the ranking comes alive. The target dividend yield is 2%. If the dividend yield is higher than 2%, we have a score of 100, or at least 2%, we have also a score of 100. If it goes below our target dividend yield, the score decreases. And you see this here. And if the dividend yield becomes too low, the stock isn't interesting anymore for you, then the score drops to 0. And right now the ranking is still very basic, primitive, because we applied only one criteria. We haven't gained anything in reality so far, but we can add a second criteria, the dividend increase, the compound annual growth rate within the last 5 years. Then we could say 20%. We always are more demanding than we were when we configured the filter configuration. 20%, let's apply the ranking, the new ranking, and then you will see that the score will update. Apply, and the score updated itself. We see for this REIT here, for Tanga outlet, factory outlet, there we have a growth of 10%. It just matched the filter criteria, but it doesn't match anymore our wish here based on the ranking. So we only have 75% from 100% before. We can turn on dividend stability, can increase it to the max, because dividend stability is already very high because of all our criteria we applied in the filter. Let's apply it once again. You will see a drop, mostly a drop. Let's stay with Tanger, and we already have 3 different criteria in our personal ranking, and now the more criteria you have, the more cumbersome it gets to analyze how this the score of 80 is comprised, how it was calculated, which criteria was met, which wasn't, or wasn't fully met. Because of this, we have a tab, a ranking tab, and the ranking tab shows the detailed result of the ranking. We have Tanger with a score of 80 of 100, and now you see that the dividend yield was fully matched this criteria, that the compound annual growth rate, we remember we wanted 20%, we only got 10, so about a half, was only matched by 50%, and the dividend stability matched by 90%. because it was already very high with, or is already very high with 0.9, but we wanted 1. And here you see, as I repeat myself, you see the outcome, or the detail, the detail of the ranking. You can see repeat this, you can just change the stock, and now you see the new detail of the ranking. You can make the ranking for sure more complex by adding more criteria. We have different background colors here. They correspond to the matrix or to kind of matrix. Blue background color means it's dividend related matrix. Green color means that the matrix are related to earnings or profit. And this light red background means that the matrix are related to debt. So we can say that we want max debt to assets of, let's say, only 25%, which is rather low. And we want that the company is able to pay back its debt by its own, by free cash flow minus dividends, within 15 years, which is also rather demanding. And then we can apply it, and we will most probably see that the score in the rank will drop once again, because with this very demanding criteria here. And you see, mostly you see the drop. Let's stay with VPP. What can we see here? You see that the ranking analysis has 2 new columns corresponding to the new criteria we just added to our ranking, and that the criteria is not matched very well, only 36% and 21%. Actually, VPP is able to pay back its debts by its own, which is already very well, but they need more than 70 years to do this. I can show how this is calculated. We can enter the full chart analysis, and we see even more about the stock. Then we have new charts, and what's interesting is this. We see that we have a free cash flow of 1 billion British pounds, a little bit more. We have dividends paid of about 750 million, and we have debt of about 24 billion. And if you divide the remaining about 300 million, which is available after free cash flow minus dividends, and these 300 million are about it takes more than 70 years with the 300 million to pay back all its debt of nearly 24 billion British pounds. This is how it's calculated. We also have debt-related matrix here, and you can say it's payback years. And we also have the debt to assets ratio here. These are, here you see the number of years, 71 years, and here you have the current debt to assets ratio. We can even add valuation-based metrics to our ranking. For example, you can say that we want to have capital gains also, because we are not only interested in increasing dividends, we are also interested in capital gains, and we want the current valuation to be fairly priced. Only 5% overvaluation is our target. Let's apply it once again, and mostly we will notice, I guess, a drop once again. Let's apply it. sometimes increase, sometimes drop. Let's stay with VPP, go into the ranking, and then we see that VPP is nicely valued, or even undervalued, probably because we have 100% match of the criteria. Expected capital gains, how is it calculated? Expected capital gains are calculated based on the estimates of the analysts. Here we have can calculate a fair value in the future. We have the current stock price, and then we can calculate by the difference of fair value in the future and the current stock price the estimated capital gains. That's very easy, and we have these max overvaluation criteria, which is simply based current stock price and current valuation. And we have a current valuation of 2.67 British pound, and the stock price is slightly above, so we have a slight undervaluation, which means we can also show it at the matrix here. And then you see what I was talking about. We have a slight undervaluation based on earnings, and on cash flows we have a slight overvaluation, sorry, based on cash flows. The quote is nearly 13 and the fair value operating cash flow is 1267, so we have a slight overvaluation based on cash flow, but it's still below 2.1%, is still below our 5% threshold, which means it's 100%. It matches 100% our criteria. So this is a ranking. You can now sort by descending order, and you find the most interesting stocks according to your own ranking here on the top, and then you can just go from top to bottom with this list, which nicely suits your criteria. And you can just see here by looking at this chart that we have a high quality stock. Now there's a problem with unclicking it, that we have a high quality stock here with long-term profit growth and growing dividends as well. For the first time, you need to configure all this according to your needs. When it's done, I suggest that you create your own filter, your own ranking, your own watch list, name them the same so you know they belong together. When you configured all these, you just save them. You save the filter, you save the ranking, you don't need even to save the watch list, because you just add stocks here and remove stocks like this. You can then, let's add some stocks to the watch list, and now we are going to refresh the browser, and then you can see that all your configuration gets applied and the ranking is applied. That's our ranking here. And if you want to apply the watch list, then you see the stocks we just clicked on, we just selected. So, and the ranking is always up to date, because the data here is always up to date. You can export the ranking if you want to Excel. Many people create their own ranking in Excel, but that's rather cumbersome, because it always needs to get updated, because the data gets outdated in Excel. And mostly if you have an Excel ranking, then you don't have this. This nice analyzes how the score was calculated, which criteria was met and which was not. So that's the video, you can now just go through all these stocks, and these are all nice dividend stocks with high dividend profit growth and nice earnings growth as well, and mostly hopefully nice valuation and nice debt situation as well, if match our criteria. That's all I wanted to say for this video. I hope you liked it, and if you liked, then just try it. You can try most of it even without registration. Thanks for watching. Goodbye.